One thing that kills more traders than bad entries is complexity. They literally jump from setup to setup, stacking indicators, tracing every green candle that they see, every liquidity grab, inverse fair value gap, ICT, SMC, ladder ordering, trend line, trailing breakout, Wagyu beefstick they can find. But watch this for just a second. This is a little clip from our live morning session. If we sell short here, we got 4 minutes to go. If price reaches outside the range, we're looking at about a 22-point TP level. I will be most likely just using a hard stop for this. So this is my grade for the day. It's a C setup. So I'm gonna go with a 22-point stop. So TP has been hit here on this trade, so let's go. All right, so that's one trade, one simple setup. And the wild part is that the community took it as well. And stacked wins like this from Stewart, C-rated orb short, ends up working out. Another win for the books. As you can see, he took the exact same trade. And at his TP level, he left 50% to keep trailing. Beautiful win, Stu. An even bigger W with Trevor here. I don't know what kind of lines these are, Trev, but it's all good because the real win wasn't even the trade. He said, God is good, big things are happening and coming to fruition. So congratulations, Trev. Love this post. Matt's E-grade, $1,100 win. You can see it's the same setup. Nice job, Matt. Andrew with the same setup, $960 times 3 accounts. Beautiful trade, brother. We got Daryl with the same setup. We got Braden with the same setup. Just so many wins in here. Here you can see 25 green days, 2 red from Kyle. All right, so now let's break it down on the chart so I can show you step by step exactly how we got this win, keeping it as simple as possible. The first thing we want to do is just mark the high and the low of the first 15-minute range. Now, as this range is developing, we can go ahead and take a look at the financial news for the day. Do we have any red folder news, CPI, PPI, whatever it might be, right? Tomorrow we have PPI. We just want to absorb that and be ready for the volatility that might come. We also want to zoom out and just take a look at the last 3 to 5 days. And here you can see price action to the upside. What we're looking for is the most impulsive vertical move on the chart. We're trying to get an idea of who's in control of this market. I've shown my students how easily structure can be broken, but you really can't fake momentum. You can't fake volume. People will do what they call a top-down analysis, where they use structure to identify who's in control on a higher time frame, and then they go to a lower time frame. I've shown my students and I've proven that that really doesn't work very well. You get faked out a lot, but you can't fake. The market makers cannot fake real momentum that we see with our eyes and the volume that's behind that momentum. They can fake price. They can actually manipulate price action. Much harder to manipulate momentum and volume. So here we can see that judging from this push up, this vertical push up where you see a lot of momentum and volume behind this, that just means that on a higher time frame, the bulls are in control. I need to be looking for longs because buyers are in control. Essentially, I want to be moving with this money. Okay, I don't want to move against it. I want to move with it. I want to ride on the backs of it. Okay, and because I'm looking at multiple days, I consider this my high time frame, but I'm not going to actually move to a higher time frame because I'm actually trading on this time frame. So I want to look on the 5 minutes zoomed out and say who's in control on this time frame. Now I'm zooming into price action for the day, putting it on the board. We're still letting that 15-minute range play out. Now it's played out. And you can see that today's range was actually a 5-minute range. I know a lot of people, let me trade the 5-minute orb. Well, there's a lot more noise in the 5-minute orb. So we're just waiting for that 15-minute range to break. And then finally, we get that 5-minute break to the downside. But here's the problem. Remember, we just said our high time frame bias is up. So I'm kind of looking for a break to the upside. On top of that, our center line is blue, indicating that the lower time frame momentum is actually pointed up as well. So just like you saw in the live trading session, I graded it as a C setup because I don't want to go in with a lot of sizing, being that this is totally against my high time frame bias. Now, if this were an A or B setup, I would be totally comfortable adding a position at this outer band and just using an invalidation zone. Essentially, the invalidation zone would be my stop loss. I would ladder into my position, and then once I'm in profit, I would trail price to get maximum profit. But today was easier than that. I just went with a hard stop loss, and the next candle proved to be a pretty nice candle because we only waited 5 minutes to hit our TP. Now, here's a pro tip. When you're inside a trading view and you turn the chart to auto and you're looking at a visible range, say what I'm looking at right now, I can use the long or the short position, and what that's going to do is it's going to take the visible range that I'm looking at into consideration when giving me the stop loss and take profit levels. So if I'm looking at a bigger range, say I zoom out, you can see it gives me a much bigger stop loss and take profit level. So the real question is, how much of this range do you want to see and take into account for the overall volume? Now, a lot of people use ATR. I just find this to be a lot simpler, and a lot of my days are A and B setup days, so I'm just using the invalidation zone on the opposite side of the range anyways. Now, at this point when price legged down, I was already off the stream, but my students know they can trail using the shelf method. And basically what this says is that anytime there's consolidation with a leg down, we're taking that last swing point and we're going from the body to the tip of the wick, and we're just creating this zone right here. And say, we had a break even stop back here, we'd probably be right above this zone. We're waiting for price action to either create a new zone or come back, test the shelf, and then move back down into this consolidation zone, getting ready for another leg down. So essentially the way that shelves work are really simple. You're just going from the last swing point, you're waiting for price to retest the shelf in order to move higher. So these would be the shelves over here, okay? And so if I drew these out like this, and then I had this one up here, and say your entry was down here, all we're doing is we're waiting until a price retests the shelf, okay, like it did here. Then it moves up a leg higher. And once it moves to that next leg, say this is consolidation over here, we're moving our trail stop into that consolidation. We're giving room for the shelf. Price comes down, taps shelf. As soon as it taps shelf and moves away, we're able to put it inside the shelf, okay? Then it comes up here to consolidation, then it breaks higher and it leaves this shelf. Now it hasn't tested this shelf, so we would take our trailing stop and we put it in the middle or the lower part of this consolidation. And then once price either, it doesn't have to test, maybe it consolidates and makes another leg. Okay, if it did something like this, we would skip this shelf, we'd go into this consolidation, and we'd be waiting for a price to retest this shelf and then move higher, because this would be the new shelf. So this is how shelves work. It's just a terminology I've come up with to basically trail price action. Okay, so let's play price action out a little bit more. It does just that. It doesn't go back. It skips this shelf. That's just very bearish price action. And it's at this point where we could definitely move our trailing stop into this shelf because we've given room for price to breathe. And what happens? It basically takes it out right there. So if you're trailing price on a 5-minute time frame, you pretty much got a 3-to-1 out of this trade with a pretty low sizing day. So really not a bad day at all. And this is how we've only had so far. I've only had 8 red days in 2025 trading the ORB Crazy Horse with dynamic money management. And if you want to learn more about it, the best part is I did put together a complete roadmap along with my checklist. If you want it, just comment the word checklist and I'll send you the link to join for absolutely free.